Look at Bitcoin's multi-year price history. You notice points where the market moves hundreds of percent. Zooming in, we find specific dates where upward momentum begins. We fed these dates into an AI to scan for news events. The results came back totally empty. The news wasn't obvious, the story wasn't public, but the capital moved anyway, creating a total disconnect between the headlines and the tape. Everyday traders operate on a different timeline. They wait for a headline, then frantically try to align their portfolio with the breaking news. This reactive behavior creates a very confusing reality. A company releases a fantastic earnings report, only for the stock to violently sell off. Or a terrifying global headline drops, and it mysteriously marks the exact bottom of the market. By the time a bullish story finally makes it to your phone, people with better models and deeper connections have already finished building their positions. Sometimes they have been positioned for weeks. Textbooks talk about the efficient market hypothesis, the idea that asset prices instantly and cleanly reflect all available public information. The real world refuses to work that neatly. Financial markets are a messy ecosystem driven by extreme information asymmetry. The public reacts on the surface, while unseen forces dictate the true direction. Smart money does not wait for a public signal. They use superior resources to identify demand long before a single journalist types a headline. They operate in tight elite circles. Billionaires like George Soros possess the capital and the private networks required to move entire markets, while the general public is still totally in the dark. The recently unsealed Epstein files revealed exactly how extreme this information trading can get. According to the files, Prince Andrew was allegedly trading classified, actionable financial intelligence in exchange for horrific, illicit favors. As the comedian George Carlin famously said, "It's a big club, and you ain't in it." Trying to base your trading strategy on public narratives is a guaranteed trap. This brings us to a specific market mechanism known as exit liquidity. It is the mechanical reality behind the old saying, "Buy the rumor, sell the news." Look at this flowchart mapping out a manipulated trade. A highly positive headline triggers a wave of retail traders rushing in to buy. This public enthusiasm provides the exact liquidity insiders need, using that bottleneck to silently unload inventory directly into the hype. We saw this dynamic clearly in March 2020. Billionaire Bill Ackman went on national television to warn about the end of the world, sparking widespread panic, while he quietly executed trades in the background that netted him billions. Price is never reacting to the headline alone. It is strictly reacting to the gap between what the news says and what informed money had already priced into the market. You are never going to beat these insiders to the information, but you can statistically track the behavioral footprints they leave behind. This chart illustrates exactly what that footprint looks like. We call it a trigger day, a single expansion day where price and volume break completely out of the standard deviation. A true trigger day represents a real expansion in price. It signals an unusual urgency that is mathematically distinct from the standard deviations of a typical trading week. Tracking this statistical footprint allows us to measure where informed money is actually showing its hand, independent of the public narrative. When we tested this logic and required a strategy to wait for at least one trigger day within the last year before taking a trade, the maximum drawdown was slashed in half. That single rule dramatically improves consistency because it automatically filters out assets sitting around like dead money, which lack the institutional demand needed to sustain a rally. Stop caring about neat stories. Stop relying on social media opinions. The only thing you can trust is tested, measurable behavior. And if you are waiting for the next significant run in crypto, here is the cold, hard data. Despite the noise, Bitcoin has not registered a single verified trigger day since November 2024. Until that footprint appears, you keep waiting.